Ladies and gentlemen, good day and welcome to the Transpek Industry Limited Business Update Conference Call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Bimal Mehta, Managing Director of Transpek Industry Limited. Thank you, and over to you, sir.
Thank you. Good evening to all participants. I extend a warm welcome on behalf of Transpek Industry Limited to everyone joining us for our business call today. I am accompanied by our Joint Managing Director, Shri Avtar Singh, CFO, Mr. Pratik Shah, our Company Secretary, Mr. Alak Vyas, and SGA team, our Investor Relations Advisors. I will provide a brief overview of recent developments. Post that, we will open the floor for questions and answers. Just to reiterate, given the nature of our business model, we have consistently emphasized that in our earlier interactions that our company's performance should ideally be assessed more on an annual basis and not on a quarterly basis. The fiscal year 2024 presented notable challenges across the chemical industry value chain. This was primarily stemmed by widespread global destocking, slow demand from end-user industries, and uncertain pricing scenario due to excess supply of select products and full opening up of supplies from China, and that too at a very low price in most products. The overall business performance of Indian chemical manufacturers had been subdued for the financial year 24, and we were not immune to it. I would like to emphasize that company to certain extent withstood the headwinds in this challenging business environment due to stable business and customer trust. And we have also followed prudence in not deploying capital on capacity expansion without having clear demand visibility. With a 6 decades of presence in chemical industry, Transpek Industry Limited is a prominent supplier of chlorinated products, serving diverse industry including plastic, polymers, pharmaceuticals, agrochemicals, dyes, pigments, photoinitiators, etc., organic peroxide, etc. We are delighted to say that all our products are developed in-house at Transpek. Additionally, we have strong collaboration with esteemed universities and scientists in the surrounding area for new product or chemistry work. Over the past few years, our company has focused on developing more value-added, stable and scalable products. As part of this strategic plan, we developed multiple new products and dispatched samples in financial year 2024. However, further validation and scalability of these products will depend on customer mandates, and we will deploy capital prudently to support these efforts. Coming to some brownfield work that we did, the plant that replaced an old plant has already been commissioned and has started production. The products from this plant are currently in low demand, so it is not operating at full capacity, but plant is ready and it's giving the product that is required. At the same time, we have identified some potential from pharma chemical market in various regions such as Africa, Middle East, South America, and Eurasia. Our objective is to expand a diverse range of products with more value-add and high-margin products. In the next 3-4 years, we target nearly 30-35% business will be derived from high-margin products. We recently started business with customers in Eurasia and South America. We have also started supplying products to United States customers. All this strategic transition positions us for sustained growth and success within the evolving market landscape. As mentioned, business performance for financial year 24 has been soft due to gradual pickup from clients amid uncertain demand and lower volumes in domestic market. Demand across the end industries have remained subdued both in domestic and global markets. The ongoing challenges in Middle East and Europe have further impacted the demand. With over 85% of our total business coming from the export market, freight and logistic costs have increased to some extent in second half due to Red Sea crisis. However, a large part of our freight cost is paid by customers, so that is also something that has cushioned to some extent this increase in freight cost. Overall, lead time has also been impacted because the inbound and outbound shipments have to take a different route than the Red Sea. Our production strategy is closely attuned to current market demands. Though in medium to long term, the demand for key acid and alkyl chlorides are anticipated to remain stable, and based on recent engagement with our customers and clients, we are expecting a modest revival in second half of financial year 2025. Now coming to one major subject that many of you have been requesting for listing on NSE. So as you may be aware, we had already initiated the process of listing our company shares on National Stock Exchange, and the process has already been going on. But there are there's a huge amount of documentation, including the information that was required from 1970s and 1980s. So all this information has consumed a lot of time, and now we are almost ready with our application. Our advisors are examining this information and data in detail, and once it is done, we'll be applying to NSE very shortly. Coming to the financial performance of financial FY24, total revenue for FY24 stood at 604.8 crores. EBITDA for the year stood at 107.5 crores. EBITDA margins for the full year came in at about 17.8%, so roughly about 18%. Profit after tax for the year came in at rupees 38.6 crores, and board has recommended a dividend of rupees 14, which is 140% for equity share of its value of rupees 10 for the financial year 24. With this, I conclude the speech, and now we open for the questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nirav Chimodia from Anvil Research. Please go ahead.
Yeah, sir. Thanks for the opportunity. And good afternoon to the entire team of Transpek.
Good afternoon.
Sir, I have 2-3 questions. So one, if we see this financial year FY24, I think our revenue degrowth is close to 28-29%. So if you can just walk us through in terms of how much was the volume degrowth in FY24, or was there any price-led degrowth also, which has led to this 28-29% fall in our revenue?
Okay, so there are, both are correct. One is there is definitely a volume in terms of quantity, volume degrowth, especially in some of our polymer application. And on the other hand, price also has reduced. Now, price has reduced not only because of the market dynamics, that also is there, but it is not very significant. But more importantly, as you might be aware, FY23 raw material prices had shot up.
Correct.
So this is back-to-back effect. So raw material prices shot up, so naturally our prices went up. Now raw material prices have largely come to reasonable level, and that affected our sale price also. So both where the reduction has happened.
Correct. Because if we see our polymer division sales, I think it has degrown by close to 21%. So I presume that, so I presume that out of 28-29% degrowth, what we have seen, 21% is predominantly coming from the polymer division, and that too in terms of the lower offtake from the customer. So
yes, largely the volume. Yes.
Yeah. So safe to assume that, let's say 24-25% of this degrowth is contributed by the volumes and rest by the prices?
24 to 25% of this degrowth is maybe little more by volume. More by volume.
So almost all the degrowth is predominantly from the volumes only, if we take it in that way.
Yeah, but there has been impact of price. The raw material cost. There has been impact. I don't have the exact number.
No worries.
But yes, but there has been impact of raw material. As for example, couple of our raw material went down by almost 30-35% than what it was in FY23.
Correct. Sir, based on your customer interaction, you mentioned one of the point in the opening remarks that we expect some modest recovery from H2.
Yes.
So let's say FY23 was the best year for us in terms of the volumes from almost all the product segment, predominantly the polymer side.
Yes.
So can we see those volumes fully recovered in H2, like what degrown we have seen in FY23? Is it safe to believe that most of those volume degrowth could be recovered in H2, or those recovery could be extended in FY26? Based on your customer interactions.
Yes. So we do not expect full recovery in H2.
Okay.
We expect probably about 30-40% maybe around recovery in H2, and the balance will spill over to the next year. See the one another answer to this question. Little more generalized based on the customer interaction is that overall market structure is not significantly changed.
Correct.
It is purely the cautious approach that everybody is taking because of the significant uncertainty, and so nobody is ready to build inventories. Nobody is ready to have significant quantities in the value chain. Many people are looking at kind of back-to-back ordering. Those kind of things are there. So, because as you know, post-COVID, everybody suffered due to very, very heavy or high inventory. So people are, companies are a little bit cautious in terms of piling up inventory. So gradually they are also cautious, and naturally, therefore, the ordering to suppliers like us is also very conservative or very cautious. But structurally, market is not affected in that sense that there is for example, there is some alternative or there is some other product, or the demand for this product is not going to be there. In fact, new application areas are also being developed. So longer term, we see revival. And besides that, we are also, we'll talk about that later on, but some new products we are working on, which is non-polymer, can provide some good growth. All that work is going on.
Correct. So, sir, two questions here in terms of our current discussion. So, one is, let's say the newer products, what we have launched over last 2-3 years, how much they have contributed in FY24, and is there a possibility that some portion of our revenue degrowth, which has happened in FY24, plus the recoveries, what we are expecting, like 30-40% in H2, what sort of contribution could further be coming from these newer products so that the impact of this revenue fall could be minimized?
See, the issue is that the question is not about products. For example, we introduce about, I think, 3 or 4 acid chlorides into our portfolio.
Yeah.
And most of them have good potential. But currently, as I mentioned, the conservatism that is apparent or very clear, ordering process is slow, very slow. And so, see, I just give you an example that we started, I mentioned in my speech that we started supplying some new acid chlorides, not those which we were traditionally supplying to a couple of customers in US.
Yeah.
Same way we started supplying some acid chlorides which we never supplied to Korean market. We have started supplying, and these are all good potentials. When I say good potentials, these are like 1,000, 2,000, 3,000, 4,000 metric ton a year kind of potentials. But it is going to take some time before we really see some major traction out of this. But we have begun, we have started, and that helped us expand our list of customers, list of regions, and build that potential that we can capture in the coming period.
Yeah. So this list of products what you mentioned,
Sir, maybe request.
this is just a continuation of my question. I'll join back once this is over. So sir, just to continue with, let's say, these 3 to 4 products or 5 products what we have launched, is this a potential to have a turnover of, let's say, 150 to 200 crores over next 2-3 years based on the kind of geography penetration or the customer diversification which we have entered into?
Maybe around 80 to 100 crores, maybe, yes.
Correct. Got it, sir. Thank you so much, sir. I'll join back in the queue and wishing you all the best.
Thank you.
Thank you. The next question is from the line of Pratik Kothari from Unique PMS. Please go ahead.
Yes, hi. Good afternoon, Bimal.
Good afternoon.
Yes. So just in continuation to your last response, this 80-100 crores potential, this would be per molecule that you would be looking at.
No. That would, if per molecule would have been there, then I would be very happy. It's in total, roughly in total. But longer term, maybe this can go to 150, 170. But longer term, right now I cannot tell how much time. But what the visibility that we have today is that once this business is pick up, we should be seeing around 80 crore, 100 crore volume.
Correct. And these are, I believe, the acid chlorides which we have launched.
Yeah.
There are also non-acid chlorides which we had.
Just one moment. Sorry, please.
Yes, sir, I believe this is the acid chlorides which we have launched. We were also planning, or we had already launched a few non-acid chlorides also.
Yeah.
You can talk a bit about
non-acid chlorides, about 3 or 4 products are almost kind of on the verge of final validation. Customers are trying to work on the samples that we have supplied. And once testing is done, they are now validating. So validating means they are basically keeping it on the shelf, some part of it, and some part of it they are making their own product, checking their product, and again keeping those products on shelf to see how everything performs. Once that shelf life is over, shelf period is over, then they will go for performance testing for their end product, that how it performs in whatever application they are going to use. And once that performance testing is kind of successful, then we will be able to start commercial supply on a ramp-up, based on a ramp-up plan. So initially very small quantities, and then it will go up and all that. So yes, product development that we have been talking about has been now quite in pipeline, and products are when you said developed, so at our laboratory level, at our kilo lab level, to some extent pilot level, they have been developed.
And the potential here would again be similar, maybe 3-5 years out.
Sorry?
The potential for this non-acid chlorides would be similar, 3-5 years out, this 80, 100, 150, which we intend to do.
Even more. Yes.
Okay. Correct. And given the current scenario situation, I mean, we were thinking of putting up a new plant, maybe getting us some long-term contract in place, or maybe for this new product. Obviously, last year was very challenging, and possibly so next year too. So how are we thinking currently in terms of new capacity? And this is in the context that for a greenfield chemical plant, it easily takes 2-3 years to put up. So where are we in that stage? How are we thinking about it?
So basically, see, today when we talk about investment and when we talk about something, setting up something new, we are talking about significant investment. So I mean, as you might be aware, many companies went on aggressively into adding capacities or setting up projects and plants, and then huge struggle they are going through or they have gone through. So we have taken little more prudent approach, and we are just, as I mentioned, some of these 3-4 products may need some additional manufacturing facility, whether it can be an existing facility or it can be a new plant that we are kind of examining. But more importantly, how the customer is coming forward in terms of the demand visibility, and once this validation is done, or during that period, that would actually define how we are going to, move further on this. So we are looking at options where we can do something. We look at some small facility and take over, or we can do some arrangement which we already have, like job work and all that, or we can look at also greenfield facility. But as of now, immediately speaking, greenfield may be not very, very high on our consideration. It is under consideration, but not very high on our consideration. Probably a facility which has some possibility to just modify and then start production. Those kind of options we are looking at. So with little limited or lower investment, we can take less risk. We will take less risk, and then we can still capture whatever opportunities that we have. And once, like you mentioned about long-term contracts, so typically we are always in dialogue with various customers for long-term contracts also. Some of the customers, some big companies are still in favor of long-term contracts, but a big number of customers, as I mentioned, are playing very, very conservative across chemical industry, not only Transpek's customers, but across chemical industry. And nobody is very keen. I mean, there are few exceptions, but generally nobody is very keen to enter into something which will commit themselves for a very long time. They are just waiting and watching to see how this uncertain situation unfolds. But we are in dialogue with a couple of customers for some sort of contract like that. But of course, don't expect that is going to be the same level or same type of contract that we have seen earlier. But at least it will provide a stable and consistent business of whatever size that would be available.
Right, fair enough. And sir, given the total capacity here in place, given the current pricing, our peak revenue from the current capacity we can do would be about 800 crores?
More than that, about close to about 900.
Sure. Thank you and all the best.
Of course, will depend on price, but about 9.
Oh, correct. No, thank you and all the best, sir, and I hope we continue this Concall. Thank you.
Yes, thank you.
Thank you. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity. And, my question is, sir, on the new product development and,
Sorry to interrupt, Mr. Gupta. Before before you go ahead with the question, may we request that you use your handset for optimum audio quality, please? Thank you.
Yeah, I am on handset only. Is it better now?
Yes, sir, it's better now. Please go ahead.
Sure. So, sir, my question is more on the product development and new product introduction over the past few years that we have seen. FY18 we were around 350-360 crore kind of revenue. And then we got the long-term contract with our customer, and our revenue scaled up to 600 crore. But post that, we did face challenges because of COVID and all. But in FY22 and FY24, our top line has been around 600 crores. And FY23 we did see a growth, but that was primarily driven by prices of raw materials spiking up, leading to increase in our products. So, sir, in terms of, new product introduction over the past 4-5 years, except for the long-term contract that we have, how has been the, new product performance in terms of our revenue contribution? Let's say, the products, how many products did we develop over the past 3-4 years, and how has been their contribution to the revenue?
Okay. Just to correct one thing, that the 600 to 800 crore jump in FY22 and all, it was not driven only by raw material price. There was also significant quantity jump, especially as we discussed earlier with another shareholder, that especially of the polymer business, the volume coming from the polymer business. So that is one.
Okay.
Now, last 3-4 years, we have introduced about 5 or 6 acid chlorides. And if we talk about FY24, for example,
yes,
then we did business of some of these new products. And that's why you are seeing about 600 plus crore volume. Otherwise, it would have been somewhere in the range of 570 or 575 or so. So there has been contribution of about 25-30 crores coming from some of these new products. But the products are introduced in a gradual manner. So over 3-4 years, say for example, one product was introduced this year only, one product was introduced, or maybe 2 products were introduced last year. And some of these products, as I mentioned, are undergoing validation at this point in time. I have explained also in past, in my earlier calls, that the process of commercialization sometimes takes 2.5 to 3 years. Because most of our products go in very critical application. For example, making a medicine, pharmaceutical. So they never take chance with that. Or this polymer, the polymer that is made from the product that we supply, these are mission critical applications like defense and like firefighting and aircraft manufacturing and high-end vehicle manufacturing, those kind of things. So validation is a very, very long process, and overall, I can say today that we have now come to a stage where we have many products. As I mentioned in the earlier, in response to earlier question, we have many products which are at the last, stages of either approval or validation. So in next 2 years, what I feel is that what we believe is that you will see many products getting commercialized, and then gradual pickup of volumes.
Okay. So the 70 crore of revenue contribution from this new molecules you are expecting in FY25 itself?
H2 and coming, annually you can consider from next year, but H2 will see some of the revenue from that. Okay.
And sir, when the polymer business stabilizes, our base revenue should go back to, let's say, at least 700-750 crore, or
close to about 800.
800 crore.
Yes.
Okay. And sir, one thing on the capex, or that you told that you are not too keen on doing greenfield capex. So, given the regulatory challenges that we have at our existing Ekalbara site, does it mean that our major expansion or major growth will come from, job work to our to our group companies, or, let's say if you have to drive our revenues from